I'm joined now by Jackson Gomes, Director of Risk at Itau, Brazilian bank, and he's first going to talk to us a little bit about his bank, and then about his views on embedding the risk management function in the decision making of the institution. So, Jackson, why don't you tell us a little bit more?
Yeah, the bank has nowadays a larger scale, a global scale. It has a market cap close to $100 billion, total assets like $500 billion, total credit like $250 billion. So it's a large bank. Its presence is most on Latin America. We were present almost in every country in Latin America, in the South Cone. And I think that the market risk, or the credit risk in Brazil, or the whole market has got very sophisticated relatively to the other countries nowadays. And the bank has focused on risk management. And the whole governance of the bank is based on risk management. So we changed the way the bank is structured like 3 years ago. And now every process, every decision-making process has to go through risk management. So we are really embedded in the process.
So basically, you were explaining earlier the whole concept of moving away from seeing risk management as a control function, the guys with a whip who are there, and really a partner in the decision-making process.
Yes, I always start with the CRO being part of the board, and now we're getting down to the business itself. So we established a governance with level of approval, so we can guarantee that any decision, and by decision I say any new product, any new credit offer that you do for the market, we pass through a risk evaluation process that we can guarantee the capital levels are appropriate, used for that, that the risk return measurement is correctly done. So the process makes it clear for everybody within the decision-making process that we're doing the right transaction. And the idea behind this is that to guarantee that in terms of sales, we're doing the best sales.
Risk-adjusted return.
That's the way the business guys see the thing. And on our side, we guarantee that the models that we built in order to measure risk are really applicable for the kind of products we sell, the kind of clients we have. So that's the best thing to do in terms of guaranteeing that your risk function is really effective because you're part of the business.
Yeah, so I mean, because when I talk about this concept of integrating the risk function in the decision-making process, often one of the complaints I hear, or the people who would raise the question of the potential obstacle, is the idea, the receptivity of the business side to having the risk function looking at the way they see it over their shoulders. So how do you turn the risk function into a partner, and how do you get buy-in from the business side?
The key thing in this whole process is to show that we can add value to their decision. So once you show that your models are good for their pricing, and they really pick it up the best transactions when they go through risk management analysis before doing the deal, you get there. So they start to be your partner instead of being someone that's being controlled by you.
So it's also an issue of trust, I assume, that they trust the quality of your work.
Basically, you have to add value to what they're doing. And of course, we are add value for shareholders for sure. But when you show them that you can add value for their client relationship, that's even better.
Yeah. Slightly different question. It's in terms of Basel II. I'm not sure. I'm not very clear on where Brazil stands in terms of the implementation.
We are just starting the parallel phase next month for Basel II implementation, and the idea is to make the application by the mid next year. Okay. So we could use Basel II going forward after 2013.
And I assume, given the process that you just described of how advanced your risk systems are, that you would go for IRB across portfolio.
Sure. Yes, that's the idea.
Yeah, you're ready.
That's the idea. And in terms of Basel II, we're basically following the international BIS calendar. But no, banks in Brazil large banks are overcapitalized, so we won't have any problem in terms of meeting the requirements for Basel III.
For Basel III.
Yeah.
Great. Well, Jackson, thank you very much.
Thank you very much.
Have a good trip back.
Thank you.
Nice meeting you.